Good evening, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for Salasa Techno Engineering Limited. On behalf of Salasa Techno, I welcome you all to our Q3 FY21 earnings conference call. I have with me from the management, Mr. Shashank Agarwal, Joint Managing Director, and Mr. Pramod Kala, Chief Financial Officer. We will have brief opening remarks from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that would cause our actual results or projections to differ materially from these statements. Salasa Techno Engineering Limited will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I will now hand over the call to Mr. Agarwal for his opening remarks. Over to you, sir.
Thanks, Rishabh. Good evening, everyone. I welcome you all to our Q3 FY21 earnings conference call. Let me start by giving the financial performance overview. I'm very glad that the performance our team has delivered during this quarter on a consolidated basis. The Q3 FY21 reported revenue stood at rupees 174 crores compared to rupees 101 crores in Q3 FY20, a growth of 73% on year-on-year basis. The revenue growth has been driven by the robust growth in both our steel structures manufacturing as well as in EPC business. Driven by better efficiencies, EBITDA for the quarter stood at rupees 18 crores, a growth of 87% YOY basis, with an EBITDA margin of 10.3%. PAT for the quarter stood at 11.7 crore rupees compared to rupees 2.2 crores in Q3 FY20, a growth of 431% year-on-year. PAT margin stood at 6.7%, up from 2.2% in the same period last year. Let me now touch upon 9 months performance. Total revenue in 9 months FY21 is about rupees 385 crores compared to rupees 417 crores in 9 months FY20. 9 months performance is not comparable on year-to-year basis due to the impact of COVID-19. The first quarter, of course, seen the impact of COVID-19. The EBITDA stood at rupees 38 crores with an EBITDA margin of 9.8%. PAT stood at rupees 20 crores, a growth of 8.8% on year-on-year basis with a PAT margin of 5.2%. To speak about the segmental revenue contribution in 9 months FY21, revenue from manufacturing of steel structures stood at 83%, EPC power transmission at 13%, and EPC railway electrification at 4%. Here received good orders across all segments until date of Q4. Just to mention a few, over our 15 subsidiary Salasa Infra LLP.
This is the operator. Sorry to interrupt you, Mr. Agarwal. The audio is breaking, sir, from your line.
Is it? Yes. Is it better now?
Yes, sir. Please go ahead.
Okay. So I will repeat that. Our 51% subsidiary, Salasa Adobas Infra LLP, has entered into a work contract with Tex Metro Rail Engineering Limited for Bangalore Metro Railway Corporation Rail project. The project involves mainly track laying work and is valued at rupees 252 crores approximately. In addition, we have also been declared as L1 bidders in the following projects. Tender of railway electrification worth rupees 24 crores from Delhi Metro Railway Corporation for remodeling of Arjonda and Sirtavia depots for electrification work. Under the power transmission segment, we have received 2 tenders from Rajasthan Rajya Vidyut Prasaran Nigam Limited. The first tender is about 20.25 crores for construction of 220 kVA and 132 kV transmission lines of approx 50 kilometers. The second tender, worth about 27.5 crores, is for the construction of 220 kV and 132 kV transmission lines of approximately 75 kilometers. We are very confident about the opportunities in our focus sectors. In recent budget, the government has allocated almost 14,200 crore rupees for telecom infra rollout in 2021-22, with focus on expansion and strengthening of telecom networks in remote and unconnected areas. The budget has made provision to install 1,200 mobile towers in Northeast, 1,000 towers in Naxal areas, and over 700 towers in unconnected areas. Today, with the data growth and the imminent launch of next generation 5G technology taking center stage, the next decade holds exciting new prospects for the tower companies. Between 2000 and 2020, the number of towers have more than doubled to reach almost 606,000 towers. The 5G rollout will see huge capex by top 3 Indian telecom companies over a period of next 5 years, along with the need to add 1 million more points of connectivity to provide seamless 5G experience. All these are expected to provide good business to telecom tower manufacturers like us. We expect favorable demand from the telecom industry for at least next 5 years. There is an increased demand for power consumption as well as power distribution in the country. The current transmission infrastructure and regional power demand supply gap, in line with the growing need of electricity for the country, is expected to provide favorable opportunities to transmission line EPC players like us. The budget 2021 has proposed 100% electrification of railroad gauge routes to be completed by end of 2023. This should generate promising orders in the railway electrification segment. We are receiving a lot of demand for OHE manufacturing under this segment. The budget 2021 has allocated almost rupees 1.1 lakh crores for Indian Railways for the expansions. Lastly, to give an update on our new venture of manufacturing for ROB, that is Road and Railway Bridge segment, the installation of plant and machinery is on track as was planned earlier, and we expect to start commercial production by the end of this financial year. And this segment should start giving us revenues in the next financial year. Overall, we see good demand in all segments of the business we are present, and our focus remains on increasing our market share and providing quality products and services to our clients. For now, this is all from my side. I would now ask the moderator to open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants, to ask a question, you may press star and 1. The first question is from the line of Harshil Jain, individual investor. Please go ahead.
Good evening, sir. Firstly, I'd like to congratulate you on a great set of numbers. So my question is pertaining to the capital expenditure that you have planned. So you spoke about the overbridge segment, and apart from that, have you got any other capital expenditure planned?
Well, no. Right now, no. When we had planned expenditure in the second quarter of this financial year, and we're going to spend close to 20 crores on plant and machinery and the building, and that is all for this financial year. We don't plan any other financial capex this year.
Right, sir. Also, the steel prices are undergoing a lot of fluctuation. So is that going to affect us in any way? And have we, been able to hedge our raw material procurement?
See, normally, we have discussed this many times, and I've always been informing that we work on kind of a pass-through system, wherein with most of our customers, in fact, 100% of our customers in telecom sector, we have a price variation clause. So, the steel prices as they go up or down, or even the zinc prices as they fluctuate, the prices are reflected in our prices are reflected accordingly next month. And similarly for EPC businesses, at least for the transmission sector, we have a PV clause therein. So that again, if the steel prices and the other commodity prices go up and down, those prices are covered, those costs are covered mostly by, the price variation clause there. Except in couple of projects like in railways, we have fixed price kind of a system. So therein we normally, take a cushion for the price increase and quote. So normally we are covered mostly.
Right, sir. And lastly, sir, the telecom sector is also undergoing a consolidation phase. So could you give us a future outlook on that? If the consolidation is going to affect our business in any way?
See, consolidation as of now has more or less happened. In terms of, there are two sides of a telecom industry. One is the towercos and the other one is telcos. In terms of towercos, Indus Towers and Bharti Infratel have already merged and created a new entity called Indus Towers Limited, right? And apart from that, there's Reliance Jio, who has already sold their tower business to Blackstone, right? And then we have American Tower. And apart from that, we have some smaller players. So on the towerco side, the consolidation has more or less already happened. And similarly on the telco side, we have Airtel today. Vodafone Idea has already consolidated, and then Jio. So there are only three players as of now in terms of private players. So the fourth one is being the BSNL. As far as we are concerned, we have been supplying to Bharti Infratel as well as to Indus Towers, and have been the number one tower suppliers to both of them. So that consolidation has actually happened, which is actually good for us in the sense that now again we are number one supplier to them. Similarly, in case of Jio, even though they have partly sold their stake in their tower business, but they're still buying continuously from us. Similarly with ATC also. So, as such, it doesn't affect us much.
Okay, sir. That's all from my side. Thank you so much for answering my questions.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Divya Jain, individual investor. Please go ahead.
Good evening, sir. I had a question regarding the road overbridges segment. Could you give us a brief idea about getting into this segment? And you said that there was 100 crore revenue that we're expecting from this segment in financial year 2020. So could you shed some light?
Right. So as the government has putting a lot of focus on infrastructure development, and there is a lot of demand for creating new flyovers and railway over bridges, and the bridges across the rivers and wherever. The focus of the government is to create better infrastructure every day. This has created a lot of demand for people who are placed in infrastructure sector, and there is a continuous demand for the plate welded girders, which we are going to manufacture mainly in this plant. And these are going to be used under the flyovers, on the bridges which need to be built across the rivers, or the bridges which need to be built over the railway lines while the ways are being constructed. Apart from that, we will also be building structures for the bigger plants. Like suppose there's a power plant coming up which needs a lot of structures for their power plant, for like boilers or things like those. wherein there are no standard sections are used and they use welded structures. So our idea is to cater to that. And we definitely hope to see revenues from the sector, in fact, crossing 100 crores next year.
So do we have any tie-ups for that order and the revenue that you said?
We are already talking to a couple of customers, and in all likelihood, we will have some orders coming in by this month end.
Okay. And sir, another question was that you announced an order of a railway track laying. So what's your scope of work in that? And how big can this new business line be for you all in terms of revenue?
Okay. So basically, Texmaco Rail and Engineering Company is a Birla Group company. They have a work with Bangalore Metro Corporation for about 600 crores. And out of which they have outsourced about 250 crores works to us, which involves laying of railway track, the lastless railway track on the viaduct, which is being constructed by Bangalore Metro. And this is a job of about few kilometers, I think about 155 kilometers, which need to be completed over a period of 30 to 36 months. This involves laying of track, and while you are laying the track, you need rebars, concrete, and labor. This is primarily that kind of job, and the idea behind getting into this job is that there's a lot of focus of the government on development of metro railways all across the cities. I mean, tier 2, tier 3 cities also. 63,000 crores is something which government has announced to spend on metro railways the next year. So that is going to generate us, business for us. So this was an opportunity for us to get into it, and which we can leverage upon for getting future orders from other metro railways corporations also.
Okay, sir. And one last question. In the overbridges segment, what would be the working capital cycle as well as like the margins in the segment?
You're talking about the metro, track laying?
No, overbridges segment.
Oh, which segment, sorry?
Road overbridges segment.
Road overbridges. Okay. ROW. So these are all customized structures, and typically we are looking at a working capital cycle of about 90 days.
Okay.
Yeah.
Okay, sir. Thank you.
Yeah. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Naishad Purohit from Pinakin Advisors. Please go ahead.
Yeah, hello.
Yeah, hi.
Yeah, hello. I'm Naishad Purohit from Pinakin Advisors. Thank you for the opportunity, firstly. So my first question is, what is the total data outstanding as on 31st, 2020?
You're saying the debtors as on 31st December 2020, right?
Yes.
About 213 crores.
213 crores. Okay, out of the total debtors of 213 crores, how much is from the EPC business?
So from the EPC business, this is about 120 crores.
120 crores, good. So about the debtors, so what's your look on the debtors? When can we see the reduction in the number of the debtors?
See, in the EPC business, we are focusing on projects now wherein the payment cycles are good. So out of 130 crores, 50 crores is only one of the projects which we have completed now of distribution. The 50 crores out of 130 crores relates to only one project, which was of distribution, the rural electrification. Okay. And out of which we expect to receive more than 25 crores by this March itself. So overall, we expect these numbers to go better in the next 6 months because we have completed the distribution project and we expect some money to come from it. And plus the other projects of like railways and EPC, the payment cycles are not bad. I mean, they are okay as per the industry standards. It's only one of the projects which has actually stretch the working capital limit.
Okay. So, sir, one more question here related to the future of the company. So, what are you seeing the revenue and the margin guidance for the next 2 years?
The margin guidance?
Revenue and the margin guidance for the next 2 years of the company.
See, we expect to grow next year by at least 15% in terms of revenue, maybe more, if not less, maybe even about 20%.
Okay.
In terms of revenues. And the margins would remain typically in the same EBITDA percentage kind of range. Maybe slightly improve because the other business looks like it will give us slightly better margins. So overall margins, the EBITDA margins would improve.
Okay. Thank you so much.
Yeah. Thank you.
Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Sarika Kuksha, individual investor. Please go ahead.
Hi, sir. Looking at the opportunity the sectors actually are offering us, don't you think actually 15-20% revenue growth actually is conservative? Because as we actually know our management, in the past we have been vocal that we aim for 30-40% growth on a year-over-year basis. So if the pace has to be maintained over the next 5 years, would we be comfortable actually aiming for the similar pace, and would it support the 100 bips improvement in the margins on the YOY basis?
I think I'm being actually very conservative in terms of my guidance. If we look at the numbers this year, we expect to close anywhere between 560 to 570 odd crores, right?
Right.
Which is actually better than last year, wherein this year we lost almost 3 months due to COVID. So that itself is a growth of almost 25%. Okay. Mm-hmm. And of course next year we are looking at better numbers. But I'm being a little conservative on this thing. To be honest, in all fair probability, if everything remains good and there is no second wave of COVID or third wave of COVID, and business keeps on going as usual, we are looking at a top line of 800 crores plus next year.
Right.
Which actually is more than 30%.
Precisely.
Yeah. And after that, again, since we are getting into this business and this business looks promising, and then, depending on how the business grows, we might think of enhancing that business also the next year. We should further revenue next year.
Yeah. So can we safely assume that we would be aiming for a similar kind of growth trajectory over the next 5 years?
Well, that's a wish list.
Precisely. So, no harms in actually aiming for them.
Yes.
So what kind of capex would it actually attract?
Okay. See, if we have to grow at 30% year-on-year basis, we might to invest, not immediately, but suppose we are able to achieve 800 crores next year. And then we would like to grow to more than 1,000 crores year after that. Probably it will require a capex of anywhere between 80 to 100 crores.
For 5 years?
Yeah. Yes.
And about the margins, would we be comfortable expanding it by 100 bips year-on-year basis?
Possible.
Right. Thank you so much, and all the best.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and one. Participants, to ask a question, you may press star and one. Reminder to the participants, anyone who wishes to ask a question may press star and one. As there are no further questions from the participants, I now hand the conference over to Mr. Agarwal from Salasa Techno Engineering Limited for closing comments.
Okay, so since there are no more questions, I would like to thank everyone for your participation in our Q3 FY21 earnings phone call. In case of any further queries, you may always get in touch with Pareto Capital Advisors, or feel free to get in touch with us. And we definitely look forward to interacting with you next quarter. Thank you.
Thank you very much.
Thank you.